Okay, I put this session together because I wanted to do a bit of work on angles, and I wanted to point out how you might use some of this stuff that Gan left us to maybe manage investments. Now, last year I did a session in the major workshop on bean angles, I think, and this is going to be kind of an adjunct to that, I guess. So, an 8-year-old to operate the technology. When's the writing on the wall? Eject, 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 get out. I can't get out. There was only at 60,000, and Mofo said it's going to 100,000. Can't get out. You could spend 2 or 3 days talking about this stuff. So this is going to be a pretty quick overview. It's designed to give you some ideas and for you to create today the master charts that you may want to keep moving forward if you want to trade this market. Remember that what we talk about in relation to Bitcoin you can apply to other markets. And it's worth having a bit of a fiddle around with. Most of you have got some software, you can kind of go you can kind of go and fiddle around with the software and see what works. And then if you want some paper charts, produce the chart and kind of make it work for you. Unlike Mr. Gan, who had to hand draw every chart and then draw all over, and if it was wrong, he had to tear it up and throw it away. So I want to show you how you can use these things in relation to your day-to-day trading, or as an investor where you might think about taking some profit. The exercise can be done in any market you wish. It works on FX, it works on futures, a CFD, a stock, doesn't make any difference. Things that are easier to forecast, just touching on David's comment before about a forecast. Things like grains and agriculturals are easier to forecast because they have supply and demand cycles related to weather and seasons. So you can go back, we subscribe to the fact, I subscribe to the fact that what's happened before is going to happen again. History repeats. And if you're really a GAN trader, then you need to kind of come to grips with that because that's what happens. And we're going to show you some cycles that just keep repeating. But you can go back and do the same cycle work on weather. And you can go back and do the same cycle work on seasonal changes in, like beans and wheat and stuff. So you get a pretty good idea when you're going to get a good season in wheat or beans and when you're going to get a drought. And when supply, you get a drought, they can't get enough crop out of the ground, prices go up, supply and demand. It's simple supply and demand. If you were with me in Bangkok, or you had the Bangkok, that's not on the recording actually, you're with me in Bangkok, you'll remember we talked about weather, I talked about solar flares, I talked about 11 and 22 year cycles that also help you predict drought. And drought helps you predict supply and demand requirements for things like beans and wheat. And then when we look at the cycles, look at those cycles and those forecasts, you can see those years pinging out again and again and again. Okay, is to move over. Look, there are a number of really quite simple things that I've taken away over the years that I look at regularly. Using the old form guide, the brown horse, the black horse and the white horse. What's the chart going to tell us? First of all, ranges, contracting ranges, angles to market tell, and some basic form reading and common sense. I know common sense is on holidays, but if you embrace him, he will come and visit. Gan looked at bigger charts for investment, things like monthly charts and weekly charts. It's a lot easier to see what's going on a bigger picture chart than on a small picture chart because you don't have as many moving parts, and we'll see that with Bitcoin as we get into the exercise. They do work on smaller time frames, and when they all come together on multiple time frames, you often have really cool setups. Or you have a pretty good idea that a move may be done. Remember that I use timing as much to take more profit out of a trade than to look for a new trade. Note what that says. I have a pretty good idea the move may be done. I want to get out of an existing position. Does that make sense? It's an important distinction, I think, in my work versus a lot of other work out there. I'm using the timing right now, as much as I'm saying, to get out of a trade, not to get into a new one. Whereas other guys in this game will be looking for timing to get into trades. And that's really tough on your psychology, because when you look for a time and you get wed to a forecast and it fails, you're wed to it. And then you've got to get up and you've got to get into it again and again. And it can take you 3 or 4 goes to get set. If you do what I'm doing, you're already in the trade. Now you've got to make a decision where to get out and take your profit. Then we can look for the next trade. So here's a monthly Bitcoin chart. We should talk about Bitcoin, seeing that's what we're talking about. Pretty innocuous monthly chart. What's it telling us? Can anyone see anything in that chart that may be of interest?
It's coming down to resistance.
Previous support on top.
High bottom.
Higher tops.
What about the ranges?
Small.
55,600 in that range, 40,500 in that range. Contracting ranges. It's a tell. So the market made a top, which was an important top, sold off almost 50%, and then rallied again but couldn't take out the previous range. And if you look down here, that range is smaller than that range. You would expect the next range to be bigger if this thing was going to continue on. How about the weekly chart? So now we come down in time frame, 28,800, 16,000, 15,000. It's exactly the same chart. Contracting ranges, and then the market falls out of bed.
And the bar's getting small.
And the bars are getting smaller. Yeah. It's a bit of form reading. It's not, it's just a form reading type exercise. Something to keep a bit of an eye on. What else can we see in that chart?
The open close is very close to each other on the bar. So you get
Yeah.
very small body
Yeah.
on the candlestick around the top. The Dow is notorious for that.
No. The market struggles to go higher. In the hands of a good practitioner with a plan, that's really useful. So the takeaway is that contracting ranges are a sign of potential change in trend. Expanding ranges are a sign of strength. If you're an investor, I'd say watching a weekly and monthly range is a worthwhile exercise. Once those ranges start contracting, in my view, which is take it or leave it, it's time to start thinking about getting a stop up underneath your physical position, or think about where you might want to take profit, or some profit. If you got into Bitcoin at 15,000 and it's trading at 60,000, maybe you just want to take your initial investment off the table. Put your cash back in your pocket. Maybe you want to take half off and let half ride. Maybe you want to take 2/3 off and let half ride. If you take 2/3 off and this thing comes back 50%, you can buy it back again. Buy twice as much back again. Yeah? It's not definitive, but if you bought at 30,000, contracting range at 60,000, consider taking some off. At least recover your capital. Did I just say that? Must have. What about where to buy using the form? Could contracting ranges into obvious support be an answer? So this was a chart we just looked at. What about this range, and this range, and this range, and this range? Moving fast, contracting, grinding sideways. This thing's basing. This chart's telling you this down move's over. The trick is we have to read the mail. And then we can simply go to our, we're going to be banging away on our daily chart anyway, but if I was looking to buy physical Bitcoin, that's the sort of pattern I'd be looking for to find a base. Not here, not when the avocado dips on sale or hummus or whatever. Not interested. Just happened to be a double or triple bottom. I don't know what you guys think about that. I would be quite happy to have a bit of skin in the game there. It actually fell out of, what do we do? 22,000 points in 6 weeks. Right, so if we have a look at, what was my point here? So our contracting ranges to the upside, the market failed, came back 50% at least, tested the 62.5%, there'll be someone here's a Fibonacci guy, 618, and then basically contracting ranges, found a base, ran up 50% or 61.8 or 62.5, whatever you want to use. These are tradable moves. If you bought Bitcoin here and you sold 2/3 here and you used that capital to buy back in here and sold some more here, you wouldn't be going broke. You wouldn't be able to go to the pub and say, oh, I own all this Bitcoin that I'm going to hold till it gets to 100,000. You'd have a bunch more money in your pocket for beer though. There's our triple bottoms that we were talking about before.
That
So-
50% range
Yep.
is the range from right down the bottom,
Yeah, from the, I think it was March 2020
right?
to the top.
There.
Yeah.
Okay.
Healthy markets, right, so the point is the contracting ranges, either up or down, can tell you a story. A contracting range into a 50% or a 62.5% retracement of a major range is worth watching and paying attention to.
John, sorry, can you just show me where, like, so it goes back up to the 50% resistance up there. Where do you see strength in that? Do you not see weakness that it's sort of broken through it, but it's coming back?
No, I see weakness there, for
Okay.
sure. I'm saying that was the buy signal down here.
Okay.
And then I would be looking to take a bit more off probably up in here. And there's some timing and stuff in there as well. I'm just trying to keep it pretty simple.
Okay.
Yeah. So that's kind of talking about ranges, expanding ranges and contracting ranges. If you see a contracting range on a larger chart, it's certainly worth paying attention to, either to the upside or to the downside. Here's a throwaway line. Healthy markets have healthy retracements and make stairs. I think I mentioned this yesterday. A market will work its way higher, it'll retrace. Sometimes it'll retrace 50%, goes on again. Retrace 50%, goes on again. Sick markets go parabolic. Parabolic being they start to advance very, very quickly. They're probably running at an angle, we'll get to the angles in a second, but they're probably running at an angle of 8/1 or something like that. They're moving very, very quickly. Think about it as an aircraft. If an aircraft starts to go vertical, eventually it will stall and fall out of the sky. Here's another example. That was silver in 2011. See the market's making stairs here? I think I put some notes in here. The market stepped up through here, and then it went parabolic. And then it fell out of bed. Paulie and I were trading this back in 2011. I was sitting at the airport in Vancouver trying to get trades on before I jumped on a flight on a Friday night. And Paul and I were watching this move as this thing just accelerated into that $50 psychological level and then fell out of bed. That was your rule 1 entry right there. And it retraced 50% in 9 trading days. It was about 62 or 65,000 bucks a contract, I think, from memory. $62,000 a contract in 9 days. What do you think it did here? Oh, I didn't put the chart in, I might have it here. Basically what it did here was it bounced and went back to 50% of that range before it tanked and then went sideways. But if you saw nothing else except you flipped through a few charts each week and you look for these opportunistic times, you could get a trade away. We got in up here, like on a daily chart, on that daily chart as a lower top, because we've seen this so many times before. then you could pyramid on the rule 1 if you wanted. You know, it's probably,
Jim Sinclair said it was going to 200. Remember that?
yeah. Yeah, he said it's going to 200 and I'm shorting the shit out of it. So like, sitting in the corner, ordering sourdough instead of high top white.
Gold was going to 12,000.
Yeah, maybe it will, I don't know.
No, I'm
You know-
telling you what he said there.
The whole point is that everything's in the chart, we just have to know how to read it. And we don't have to get down to what's the mathematical calculation for that low or that high. We just have to go, common sense tells me something that's going vertical has got to run out of puff eventually. And worst case scenario, we ended here on our standard trading system that we're talking about, and we made $62,000 a contract in 9 days. 7 to 10 day rule, stop and reverse. What Gann said to do. So he would, in a market that's falling out of bed like this, you would run a trailing stop and reverse behind these bars. You would have had that. You would have been stopped out, and you'd have had the 50% level here to take along if you wanted. I don't know. After you'd be in the counting house, I think. But it was nice to get off that aircraft on Monday morning or Tuesday morning when I got into town, and I must say it was a long flight.
But you had to stop in place.
Yeah, but I mean, you never know. It's all stops and whatever. But the margin was pretty high. What was it for? It was about,
33,000.
They tripled it or quadrupled it that week
yeah.
from about, what were we trading, about 11,000
Yeah.
contract to 28,000 a contract.
Yeah.
But that was a repeat of the 1980 range, from the top of 1980,
Yeah.
all the way to the top.
The double top.
It was virtually what it did in 1980. And that monthly bar was the biggest bar in 20 years.
Mm. Like they're giveaways for practitioners who know what they're looking at. They're signals that we should be thinking about what's likely to happen next. If you're just trading your everyday, you could do no wrong. If you were just trading what we've done with Bitcoin, you were forced to go short there on your rules. Forget the numbers, but you were forced to go short there, which means you were forced to make this much money. If you took the trade. That's exactly right, Trevor. You had to be at the bus stop, and you had to have your ticket out, and you had to actually hop on.
But they were also monster bars too, John.
They were, yeah.
The big kahunas to hang on, it was moving.
You know,
$100 a contract a day.
yeah. This is the sort of market, somebody I was talking to yesterday, I was talking about pyramiding, I can't remember who, sorry. But this is the sort of market falling out of bed where I would consider a pyramid. Forget silver, forget the margins, but I would consider a pyramid breaking old
50%.
lows, yeah. Because it is a waterfall decline off a parabolic move into a double top. The chances of this going back to 50% were better than 50%. Yeah,
John,
happens all the time. Crude oil does it all the time.
you know how they were big bars?
Yeah.
How would you have managed that? Because I know you don't like to leave a lot of money on the table.
Trailing stop.
Just
That thing never retraced, it just kept tanking.
Okay.
It basically there were no buyers. Once it fell out of bed, it just, I think a couple of those bars might have been limited down, Paul, I can't remember now.
Yeah, good days.
Yeah, they were good days. They were the days. I remember the good old days. Could that happen again? Absolutely. Absolutely. So the point's not to show off a trade. I mean, that may be one of the best trades I've ever taken, I don't know. But that's not to show off. It's to show you that observation, the fact this thing then struggled on a contracting range and couldn't go any higher, taking that short trade there before the trend actually confirmed its change was not a huge gamble. And what I know about markets like this is if you miss that opportunity, the risk there is huge. Whereas the risk there was palatable if you closed your eyes and got on an aircraft. It wasn't quite like that, but you know what I'm saying. Trying to make light of it all. Yes, so that was one of the good ones. But look at this, just stop dead on 50%. If you trade crude oil, you've seen 50% retracements in crude oil are just like taking candy from kids on Halloween. Okay, a simple takeaway. Healthy markets move up in steps, like a stairwell. Rapidly expanding markets without a breather could be a signal in itself worth watching. And certainly you're not going to be afraid of taking the rule one off that sort of move. Observation is king, in my opinion. As a trader, we have a mechanical plan to get in and out, and that's fine. That's what we've got here on our table. That's what we've been working with. The point I make is simple observation can alert an investor or a trader that things might be crook in Muswellbrook. It might be time that the wind's about to turn and go the other way. So let's just put all of that aside. So we've talked about expanding and contracting ranges, and we've talked about stairs and parabolic markets. Does it make sense? Is it simple enough concepts to get to be able to look at a chart and say, oh, that's stairs, oh, that's parabolic, oh, that's whatever. So let's go back to supercharging our plan a bit. I want to talk about angles. Gann used angles quite a bit. And I believe that most of what he wrote was actually written for investors. So it wasn't written for retail traders like us. There just weren't retail traders like us back in the 1920s or 30s. There were people like Jesse Livermore and Gann himself and a handful of guys that would go to a bucket shop, which is like an SP bookie, and place some bets, but there weren't hundreds of thousands of retail punters like us lurking around. Gann used to get kicked out of the bucket shops. I hated him. Angles for me were an acquired taste. They took a bit of getting my head around. Mainly I think because the scales Gann left a little bit of, you had to figure out, really if you use the scales that he left in their native form, they don't really work very well. Because, back in his day, something was trading at $2 and now it's trading at 2,000 or 200 or something. So the angles just don't work. You've got to kind of make them fit. And they take a little bit of time to get your head around. Now you may or may not want to use them. I don't use all of Gann's angles. I use, like the big ones, what he calls a 1x1 angle. They're the big ones that I use on these big charts, which we're going to do. I want you to think outside the box. Markets are trading at much higher prices than Gann's day, so we have to make the angles work for us within those markets. I'm going to try and keep it simple. Generally, I think of time and price in that order. I had to adjust my thinking. And the reason I say that is I need to think of price and time. And there's a reason for that. We're going to start with time and price because that's how they're generally talked about. And I'll show you why I reverse them. Things have got to make sense to me. If you use, maybe I'll just touch on that now. No, I won't. I'm going to keep going. An angle traveling at 1 unit of price for every unit of time is called a 1x1 angle and should represent 45 degrees. On a correctly scaled chart in a perfect world, it does give you a 45-degree angle, like that. 1 unit of time, 1 unit of price will give you that angle.
Can I be pedantic and say that that's not 45 degrees?
You can say it's not 45 degrees. You like my glasses. No, it's not. But if you take out your paper, there's a blank piece of paper there, a blank chart that looks like this. There's nothing on it except I think there's a red dot on it somewhere. You just want to pull that piece of paper out. I'd like you to draw a 1x1 angle up and a 1x1 angle down. So 1 unit of time to 1 unit of price. 1 box in time to 1 box in price will be a 1x1 angle. I'd like you to draw one up. I'd like you to draw one down. Again, it's that tactile ownership I'm trying to create for you. Right, there we go. 1x1 up and a 1x1 down. Does that look more like 45? Yeah. Phew. Okay. All done? Now I'd like you to draw a 2 by 1 up and a 2 by 1 down. So that's 2 units of time for every 1 unit of price. Maybe use a different colour if you like, or use a pencil, write on what they are. So we're going to go 2 units of time across and 1 unit of time up. Now an easy way to draw angles, rather than trying to go 1, 2, 1 and then draw them, is you could go out 20 boxes and up 10 boxes and then draw a line. You'll find with most of my work a purple line is 50% or a 1 by 1 angle. The 2 by 1s and 1 by 2s are generally red. I kind of do that so that when I'm looking at a chart, I just have a sense of where I am. Now this is where I had to kind of clear my head, because I look at this and I go, that's 2 by 1. But to me, that looks like a half of that. That makes sense?
Yeah.
So I reverse them. I don't think of time and price. I think of price and then time. So I end up with a half angle, and I end up with a half angle down. That's just, you can think about it how you like, but to me, because my head just works in a weird way, that looks like a half, so it should say a half. I think that's what I've done here. So now I'd like you to draw the 1 by 2, or the 2 by 1, and the same. So you're going to go across 1 in price and up 2, sorry, across 1 in time and up 2, across 1 up 2, or across 10 up 20, or across 8 up 16. It's the same thing, and the same on the downside. And again, these numbers, I think I'll get to a slide, but that doesn't look like a half angle. That looks like a half, and that looks like, 3/4 to me. But doesn't matter how you, so long as you understand what they are, that's the most important. Now, I believe these are the most important angles. Gann used 4 by 1s, 6 by 1s, 8 by 1s, 3 by 1s. I've even seen him use 5 by 1s. But a market moving at 8 by 1 is going to be very, very fast. If you see a market moving at 8 by 1, you should be thinking parabolic. This thing's coming to an end. It's at least going to have a reasonable retracement. So by thinking of them as price and time, here we go, it makes more sense to me. And there's a whole suite of angles.
John, 8 by 1 you think of as parabolic. Often you'll see a market take off for about 4 days at an 8 by 1, then it'll come back and settle down to a 2 by 1 or something.
I'm talking about an 8 by 1 on like a weekly or a monthly
That's what
chart, and
I'm
there's
asking.
bars are extending and the ranges are expanding and then starting to contract. I mean, that's the sort of thing that's a blow off type
So
top.
4 or 5 weeks rather than 4 or 5 days.
Sure, yeah.
Yeah, okay.
Depends on the time frame you're trading in, I guess, If you're trading a 1 hour chart, then an 8 by 1 on a daily chart is probably pretty, an 8 by 1 on a 4 hour chart is probably pretty excessive. Once again, the more of this stuff you put on a chart, the more complex it becomes, the more difficult it is to make a decision. Too many options. you know. It's why the pizza shop does cheese pizza and tomato pizza. It doesn't do 900 different pizzas. Too many options. There we are, starting to look busy. The guys that were,
Any significance with the colours you've chosen for the various angles?
no, except that I tend to stick with purple or pink in this case, but purple for a 1x1, and you'll see that my 50% levels are all purple. Any idea why I used purple? Gan wrote in purple ink. Gan used it, so I use it. This is the issue. Which angle here is going to stop the market? And I was talking with somebody last night, we were talking about some astro stuff, and you go, well, you know, it was Mars that stopped the market, or the 12th harmonic of Mars, or the 36th harmonic of Mars that stopped the market. That's great in hindsight. Which one's going to stop the market tomorrow? That's it. We don't know till it gets there. So in hindsight, all that discussion becomes arbitrary. But if you're looking at all of these angles, maybe you only want to look at the big ones, the ones that kind of are more reactive. And then if you need to drill down a bit, you can add another angle to your chart. You can do that easily. You'll become very good at eyeballing them if you're using paper charts. Or you can just add another angle using a bit of software. If you're using Optima, it's pretty easy just to tick a box. And I think Profit Source is similar.
John, what's an example in real life? What would be an example of a time and price? I can't quite see. Say you have Bitcoin. It moves a certain amount in a period of time. So I'm trying to get my units in my head here.
Oh, don't worry about that. We're going to get to it.
Okay.
It's coming. We're going to draw those angles on a Bitcoin chart.
Or
Yeah.
I'll try not to worry about it because I.
Yeah, no, don't, and then if it doesn't become clear, then I'll do some work with you. But yes,
Right.
don't worry about it.
Okay. And is that there's the same principle? You say it's parabolic with price going up in time.
Yeah.
If it's coming 1/8 in time,
Very shallow.
very shallow.
It could be building a base. So you'll often see double bottoms. Double bottoms often will stop and then they'll come back and test like a shallow angle before they take off.
Okay.
You'll also find, again, we're going into like some more detailed stuff probably, but often you'll find that double bottoms happen around retrogrades, planetary retrogrades. And the reason that they go a bit further is because the planetary angle is a little lower, and they go down to find the angle and the support, and then they take off. Okay. We can add the 1x3s, 3x1s. It's up to you if you want to. My thoughts are keep it simple at least. But you know, here's another angle. Yeah, the 1x3s. It just goes on and on. But remember that this application doesn't impact what we're doing on a day-to-day basis. It does not impact what we are doing with the exercise we did yesterday and this morning. We keep doing that. We just keep banging away, banging away, banging away. This discussion is more about investing or looking for major tops where you could have another opportunity, or major bottoms where you could have another opportunity. Or if you have a bunch of Bitcoin stored under your pool, you might want to take it back and trade it in on some cash or something. Okay, so a brain teaser, just a little brain teaser. If a market went up for 365 points, where would it square time in days here, assuming time's measured in days?
5 days.
365 days, correct. Correct. That's it. Yep. So that's what Gann referred to as time and price squaring out. So likewise, if you went out 180 days here and up 180 points, that would be time and price squaring out. So a market trading at that level, or that level at that time, or that level at that time, will be seen to have time and price as square. And the same here. Time and price in a bear market would be square anywhere on this angle. They're the same. Time and price are the same. There's lots of scales bandied about. Gann left a list of them. I meant to strip them in here and I just forgot. He did leave a few in his notes as well. Some work and some don't. Every market's different. We do have to adapt these things. They don't just kind of fall out perfectly off a piece of paper. we have to do a little bit of toil. Like a trading plan, if it doesn't work and we want to use the tool, we've got to think outside the box on how we might adjust the tool to work within that market. Again, talked about scales like 30 points per bar on a monthly chart. So, the market's going to move up 30 points every month to be square. Well, it doesn't really work when you're trading beans. They're trading at 1,650 points, and when he was doing these angles, they were trading at 300 points. It's a completely different dynamic. So the problem's scale. And we have to alter the scale as prices go much higher, and the angles often don't make sense. I'm hoping you would all agree we can't alter time. Time is fixed, continually evaporating. Trying to think of, someone said something about time yesterday which was pretty funny. You must adjust the price scale, and the angle may not look like 45 degrees, but it is still 45 degrees relative to time. That's important to understand. Whilst it may not physically look like 45 degrees, a rescale angle represents 45 degrees in relation to time. That took me years to get my head around. I'm going to show you why. Let's look at some examples. So Gann started with big charts, monthly then weekly. So if it's good enough for him, it's good enough for me. If you're an investor, you don't start with an hourly chart or a daily chart on Commonwealth Bank. You start with a monthly chart and you drill down. When we're going to, and I've given this example before, but for those of you that are new, if you think about you're going overseas on holidays, you don't go look at the street directory to find the address you're going to. You go to the big map of the world and you say, where am I going? Oh, I'm going to San Diego. Right, that's the first map. Then you go down to the next map and you say, where am I going in San Diego? Oh, I don't know, 32nd Street. And then you go down to the next map, the daily chart maybe. I'm going to the Hilton Hotel. And then you go down to the hourly chart. I'm going to room 604. You don't start with room 604. Make sense? Start with the big picture, drill down. We look at the weekly. These angles should set you in good stead, even trading a daily chart, because if you're coming up against one of these big angles on a duck date, on a full moon, 7 days after you got into the trade, it could give you a really good idea where you could take the maximum profit out of that trade. Remember, I'm saying take the maximum profit. I'm not saying enter a new trade. He stipulated 1 cent per day or week or month, but things like beans were trading at 260, not 1200. So the angle's actually quite irrelevant on today's charts. In some cases, 30 points per month. Now, 30 points per month, I'm going, oh, wow, it's 30 points per month and it's 1 point per day. Well, what's 30 points per month? 1 point per day. I'm not the sharpest tool in the shed. That took me a long while to go, oh, duh, hello, like really? What is it? Could it be 1 point per day? Yes. We have markets trading at higher levels, physical chart sizes to deal with, and it's useless if it doesn't work. It's not my point having a 1 cent chart or a 1 point chart on Bitcoin. We need a 4-story building to look at the thing. It's useless. We've got to get a scale that kind of works. Gann started with bigger charts that start with a monthly. 30 points per bar. That's about as useful as an ashtray on a motorbike. 300 points per bar. Still not really much use to me. 3,000 points per bar. Well, that could be useful. Make sense? Common sense. That's useless. You can draw as many of those angles as you want on Bitcoin. They're about, as I said, as useful as an ashtray on a motorcycle. This thing could be useful. So take out your monthly Bitcoin charts. The monthly Bitcoin chart runs out to 2031, nearly 2032. Well, I probably won't be here to give you a new one. You could have to make your own. Maybe I will. There it is. Now I've scaled this chart at 1,000 points per box. So every little box is 1,000 points. Why did I do that? Because I didn't want to give you half a tree to take home and put on your wall. I wanted you to have a chart, a master chart you could put on your desk and kind of refer to. The other thing with these big charts is we're not looking to get picture perfect here. We're not looking to be able to identify the exact day and the exact penny necessarily. We just want to have something that is a reference point. So a 1 by 1 angle on this chart, and I think it's written on your chart, is 3 up and 1 across. 3 up being 3,000. Remember back here, I said 3,000 points per bar could be useful for a 1 by 1 angle. Yeah? Does everyone understand that? It's kind of important. Yeah? So we go 3 up and 1 across. Now I think I've put 1 on there for you.
These are 0 angles, yeah?
Yeah. I've just put the instructions here again, so you'll be able to go back through this if you want. Our 1 by 1 angle will be 3,000 per bar. It's a logical conclusion when I consider GAN's 30 points per month. 30 points, 3,000, it's 100 times. These markets are trading about 100 times the prices that GAN's markets were trading at. 3 up, 1 over, or 3 down and 1 over. So we're going to draw some angles now. First thing to do is draw a line across your chart at 0. I'd use red pen or some other colour pen. At 0, this is GAN's 0 angle. A horizontal line. Straight across your chart. And it should look like that. I do this with every chart I pull up. I'm going to put angles on. I draw a 0 angle on it immediately. That's my reference point, and I lock it. It's on software, I lock it. Never to be moved. We are on this monthly chart effectively going to draw angles up from 0. And they're going to come up from 0 under every high and every low swing. You should be able to see the swings, but if you need to draw them on, that's fine. Then we're going to draw some angles down from the highs. The first one, I'd like you to find December 2018 and draw a 1 by 1 angle up from 0 underneath December 2018. Is that the one I've already given you?
Yep.
Gee, you're quick. That's 3 boxes up, 1 box across. You might want to pen it in if it's a little bit light. Again, as I said earlier, rather than going across 1 box and up 1 box and trying to do the mathematics, you could go up 30,000 and across 10 boxes. It's exactly the same thing. Make a mark and draw a line. It's actually on your chart, that one. You can pen it in. And that's how it should look. It's in purple. That means it's a 1 by 1 angle. So now I'd like you to find June 2019 and do the same. Like a 1 by 1 angle up from 0 under June 2019. If you want a bit of a sense check, the angle is going to be exactly the same or parallel to the existing angle I've given you on the chart. We're going up 3 boxes for every 1 box we go across. So if you go across 10 boxes and up 30,000 points and draw a dot, so you would go a small box. So if we go across 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then you go up 30,000 points, wherever it is, 30,000 here, that would be the angle through there. So I would just make a little dot mark on there somewhere, 30,000 there. That would be your angle. Because counting across one box and up 3 and putting a dot, you don't always get a very accurate angle. I'm just about to steal your book. Yep. Yep, perfect. Yep. Yep, exactly. And took the top one here. And when we get to the weekly chart, you'll find all the 1 by 1s up here. Call these tops, call these tops. Yeah. Mathematically perfect, this market. So we can go, the easy way to count these things, if you go across 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then you go up 30. There, that's exactly where you got it. Oh, sorry, we're going to start here.
Yeah,
Right here.
one box.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and up 30. 30,000 there.
I check by using the raw.
So that angle will be there to there, and it should be parallel to that one. Yep. It's just easier than trying to go across 1 and up 3, and you get a little close dot, and then the angles kind of go wavy. Pig's very good at angles. Look at him, he brought his own little cheat sheet.
Yeah, so you use inches on the scale, so it works. So I just go 1 and then 3.
So start from the date, yeah, count across 10.
The actual colour that you use.
Yeah, that's right.
And then that way you just go across, find that
Yeah, and 1 across.
there to there, so that bar, put it on that bar, go up.
So the best way to do this is to count from your start point, go out 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, go up to 30,000. Because what I'm doing is I'm going to get a dot up here somewhere, which makes it a lot easier to join the start point to the dot, rather than trying to join the start point to a dot here. You'll find you get a much straighter line. Yeah, the more accurate it will be. Yeah, well, if you go out, if you're going across 1 and up 3,000, and you go across 10, you would go up 30,000. And we could find 30,000, which is up here.
Should be that.
Yeah. Kind of, yeah. Depends on the market. Like if you've got you might find that on some markets the best fit is 24 or 36 points. The problem is that the stuff getting left us are really related to markets trading down here, not markets trading up there. That's the problem. Any of those mathematical types will work from time to time. This is kind of what GAN was doing, but those other things will also work. Yeah, so you line up with that. Full angle, parallel with this. Yep, check with the pitch, should be pretty close. No. Yep. 3,000 points per month, 3,000 points per bar. Hey, how we go? Good. 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 What have I done, Pete? It's all good. Oh, it's 3,000 per box, yeah. Okay, do you reckon that angle was useful? Do you think that angle might have been useful? You could have drawn this angle as soon as this bar here broke this bar. So we had a high bar, and the inside bar was broken. That puts a swing in that. You could have drawn this angle in basically June, July, August, September of 2019. You could have drawn that angle. And in 2021, it called the top.
Why would you know to do that then?
Because once this monthly swing was basically in play, which happened in September when the August low was broken, then that's a swing, you can draw that angle immediately. Over here, this swing here, you can draw a 1 by 1 up here immediately. You can use angles to forecast markets years in advance. Years in advance. And you wait for the market to come to the angle. And then when the market comes to the angle, you have a plan on how you're going to act. So for me, this market just getting to this angle was reason enough to be taking some skin out of the game if I bought back here or here somewhere. Okay. We called the April 21 top. We're really looking at anywhere on this angle to be resistance, as we're looking at anywhere on this angle to be resistance. We never got there. The market took off. And you can go back and draw angles from back here, and there's some other angles in here that'll work, but I just wanted to show you these big ones. These are the ones that are kind of, I want you to show you what you're looking for. So, some of you already done it. I'd like you to find June 2019 and draw a 1 by 2 angle, or a half angle down from the top. That's 1,500 points per month, down from the top. The easy way to do it is to count 5 across and down 7,500 points, or count 10 across and down 15,000 points. That's what it looks like. The fact that when the market broke the August low, confirming the June 2019 high, and couldn't maintain this angle, it actually showed further weakness. It gapped straight over and closed below the angle. It just showed there was more weakness in the market.
John,
Give me those figures.
if I wasn't talking to you, if I was listening to someone else, how do I know they're not cherry picking here?
You don't.
You don't.
You don't. So you're asking me if I'm cherry picking?
No, I'm saying I know you're not cherry picking, but could we have done this in foresight rather than hindsight?
Oh, shit, yes. You could draw an angle under this high. You can draw, and we're going to, draw an angle under this high that runs out here, which will be an angle to watch in 2026.
If you saw all gains chart here, angles everywhere
Yeah.
on the monthly.
I've simplified it because it gets too complicated. So I just want to look at a few of them. You can draw an angle down from here, Jeff, 1 by 1 down here, that'll be resistance to watch on the way up. You can draw these angles years in advance. Years. Now I just didn't have time with this exercise. What I would have loved to have done was had you draw that angle, then do all this charting and draw the angles, but I just don't have 2 days to do this exercise. So I wanted to just get the angles and see them working. But if I was going to do this properly, I would have started here, had you draw all these bars, draw the angles as the swings come up, put the angles in, and then chart and see them come out. But I just don't have enough hours in the day. This angle here, this high here, this swing high here, you can draw a 1 by 1 out from here, you can draw a 1 by 1 up, a 1 by 2 up, put them all in, all in advance. 5 across.
1 by 1 is 30, so
Yeah,
half of 30 is 15.
15. So we're going to do a 1 by 1 up or a 1 by 1 down. We go across one box and up or down 30. Half that angle is up or down 15. Yeah, 1500 or 1500. You can work them from the bottom of the bar, but monthly charts I found the 0 angles are better. That's what GAN did. Yeah. So every one of these swings, you can draw a 1 by 1 up from all these the highs and the lows.
No, that's like when I look at it on software, I think it should have
Mm.
but I never quite got the way it starts from 0
Yep.
and underneath the low, like
Yep.
swing low, so.
Yeah. So you can draw these from under the swing low, you'll just get a slightly different position, but they'll also
Yeah.
pick up highs and lows.
Yeah.
Yeah, yeah. Kim just asked a good question. Why aren't you drawing them from the swing lows? You can draw them from the swing lows. GAN used 0 angles like this on monthly charts. That's why I've gone there.
Sorry, I'm struggling with the 15,000. I can't.
So it's half, so you're going to go across one bar and down 15,000. Maybe there's not enough room on the chart. So down 1500 at least. So that one there, is that what you're going for? Yeah. So you're going to go maybe down to, it's going to be fairly shallow. It's going to run through, where's your rock?
Yeah, this point. Yeah,
It's going to
right.
run through there. Yep. Pretty well comes down underneath this one. There.
I mean, I do it.
1 by 2.
Yeah. Yep.
There.
It's half the price movement that a 1 by 1 is. Yep.
So you just transfer.
Why would you do that, love?
It's down 1500, so you change
just
that.
only do
You
highs?
says
No.
across 5 and down 750.
Oh, yeah, sorry, yeah, that's right, yeah, swing low, sorry, my glasses.
So you change it to 750.
Yep, exactly.
Yeah, okay, right, that's a.
Yep.
So this low here.
Yep.
So down from.
You can do the highs as well. When they're this close though, they're not going to give you much room out here. I'll talk about that. I've had them all on the chart and then I've kind of paired them back to the ones that are working. But if we're getting up into that area where that high and that low angle could be close, put the other one back on the chart.
You go across, put it there, go down to
No, up 30.
it makes no difference. Like the beauty of it is you just go like, because you're doing an anchor, you just go across, let's say you want to do a 1 by 3, you just go like
They seem to be
depending on
okay
the
with
size,
it. Now,
just go across.
with this one here, do I try and do the same?
So you think.
Sure.
And then go down 2 to 3,
Oh, we'll get to it in a
This
second.
should go down to here, so it's not.
John, I'm not sure that was correct on the screen.
You sort of.
Okay, maybe it's not.
If you're driving that.
I'll double check it. The point I was trying to make with this angle
You think that comes out of here?
was that where this angle cut 0,
Yes.
where this angle cut through 0,
Would be down there.
you will find where these angles cut through 0, they are also squaring out and they will give you another swing most often. So an angle from here that cuts through 0 will likely give you another swing.
John, what made you use a 1 to 2?
I checked them all,
Another square
David.
there, there's a
Yeah.
swing.
What I've done is try and pick the eyes out of it because I've only got 90 minutes to do a 3-day
Make
lesson.
swing, we made swing stats.
Okay. Before we got to that particular point in time, we can draw the 1 by 1 up from 0 in December 2019. I think a lot of you have done the 1 by 1s. I think I put dots on most of them. Go ahead and do that. They're swings. They're monthly swings. 0 under the monthly highs and lows.
Very interesting that it's seasonal.
Yeah. There's lots to be seen in these charts. Do you think that angle might have been useful? If you drew it back here, you could have you could have drawn that angle in January 2020, as soon as this low was confirmed with an up bar. And it came into play in 2021. All in advance. I'm not cherry picking. Have I cleaned the chart up a little? Yes, because I want to show you the big angles working. I have 90 minutes to do a 3-day lesson. Does that get your attention? Note the market couldn't close. The market couldn't close above that 1 by 1. That in itself is telling you something. Okay, moving along. Now I want to draw a 1 by 2 down from the February top in 2020, which should look like this. I'm just taking the tops, the bottoms. You can 1 by 2, yeah. I'm taking the swing tops, the swing bottoms. You can look at a fan on every one of these if you want, and from 0. But what I'm trying to do is show you the major angles working. And I'm trying to show you that you don't need to have 400 angles on your chart for them to be useful from a big perspective. I'm going to draw a 1 by 1 up from the March 2020 low and a 1 by 1 up from 0 at the September 2020 low. Looks like that. Now I want to point out that where these angles intersect at 0 becomes a swing, becomes another angle. Intersects 0 becomes a swing, becomes another angle. If it's not a swing, it can still be an angle drawn from there. If we've got an angle coming down here, crossing 0, we can immediately draw a 1 by 1. You can project this sucker out till 2150 if you want to. Do you reckon that angle was useful? Now remember, we would have had this angle would have been on the chart here in, where were we, early in 2020. As soon as that top was confirmed, we could have drawn this angle. This angle was on the chart when this low came in. We drew the angle in 2020, we didn't get the low till March or something, 2021. It was on the chart for a year before we got the low. That found support on that angle.
Then you'd be expecting it at around that time.
Exactly. Exactly. So if I'd taken my Bitcoins off, and I'm watching this thing come back into what's pretty well a 50% retracement on the 1 by 1 angle, I might want to go down the road and buy a few more bits of coin. If I'm an investor. If I'm a trader, I'll just wait for the higher bottom and trade it on a daily chart and happy days. I can't make this stuff up. It's geometrically what it is. Like, you know, from where the 1 by 2 from the February top intersected the low, price squares out, and the angle calls the low in June or July 2021. Market could not close below this 1 by 1. The monthly angle could not close below the 1 by 1. That shows strength. Okay. Can you see how they're running months ahead of time? We have them in place months before we need to worry about them. Months before the market comes to trade against them. So if we draw the rest of them in, I think they're the only ones I wanted you to draw because I'm going to run out of day. Seriously run out of day. If you draw the others on, coming back to Jeff's question earlier, as soon as this top was confirmed here, when the low was broken, you can draw the 1 by 1, which brings us down into where we are. You can draw the 2 by 1 or 1 by 2, however you want to think about it. Crosses 0, you can draw a 1 by 1 up from here, and you've basically got a grid moving forward into the future.
And how many of your instruments does these patterns work on?
Every one. This one's particularly good because it's mathematically pretty close to perfect, and you'll see them pick it off. Some of the others might be just like, you know, a few ticks, a few points, a few whatever away.
Yep.
I think I'm going to show you a couple of charts here in a second. But these aren't bad. They may not be exact, but they're close enough for a good practitioner to make some money.
So where do you take notice of a 2 by 1 and a 1 by 1? I mean, you just said, oh, look, I just drew a 2 by 1 there and just perhaps it's here. I mean, why?
I've drawn them all.
You draw them all?
And then I've cleaned the thing up to show you what's going on. But the point I'm trying to make is that the angles, the geometric angles, if you want to use them all, they'll call all of these tops and bottoms. But if I put 8 angles on here, I'm going to show you a weekly chart in a minute which I trade from. It just looks like Central Station. And if you don't have a practiced eye, it's useless. So I've tried to just come and say, look, start with the big ones. We can draw these as soon as the swings are confirmed from 0. And then for the angles coming down or up from highs or lows, I do use the 2 by 1s and 1 by 2s. They're just the next angle. It wouldn't really, you know, I'm using this to try and, this is an investment type strategy. I'm using this to try and find highs, a buy and sell, you know, a buy and hold strategy. I'm not looking to trade this stuff. What I'm demonstrating here is that this angle, the 1 by 2 or the 2 by 1 in this case, down, also called the reaction before the market kept going lower on a monthly chart. And then this is where we are hanging around here. Draw as many as you want. I stick with the 1 by 1s and 1 by 2s, the 2 by 1s. They're easy to keep track of. If you have software, you can do a sense check on others from time to time. If you've got these set up in Optima or Profit Source or something, you can just tick the box to turn them on and off. But I would suggest you stick with the big ones on the big chart and don't get too confused. The angles also provide support and resistance into the future, which we showed. One more chart. Here we are, I've drawn another angle on here. You can see where these angles are dissecting the 0 angle. I'm already drawing 1 by 1s. Can you see where we've got multiple swings giving us angles close together? The market starts to get, congested. It doesn't kind of flow freely, like here. You see the big move here? Now we've got 2 angles together, the market's churning away. This is where it's very likely putting in some sort of bottom. February 2023 would possibly be a time to watch where these angles are intersecting. And it also becomes a low here where the 0 angle intersects, where the 1 by 1 intersects 0. I wouldn't be surprised if that becomes a retest low, like a higher bottom on a monthly or weekly chart. You can see here, Jeff, I've got where these things have intersected 0, I've already got the 1 by 1s on moving forward. Already watching that stuff. And because we don't have a lot of swings on the monthly chart, we don't have a lot of 1 by 1 angles. When we get to the weekly chart, there's more swings, we get more angles, it gets more convoluted. Bitcoin monthly, where are we? Remember, where they square out 0 could very likely be another turn. Now we've got the big picture, we can crunch down a little bit. Let's look at a weekly chart.
So you're still saying only less than 10% of people use this, or do the big Goldman Sachs guys have a bunker full of PhDs in mathematics
They might have a couple of actuaries that do this sort of stuff, but there's a very small percentage of the population, Jeff, that use any of this. Because they don't know how to use it. They see it, but they don't know how to use it. You know? They say, oh no, that's really good in hindsight. You go, oh no, that's amazing in hindsight. But how do you use it moving forward? Well, you use it moving forward by having the angle on the chart and watching the market trade to it. That's what GAN used to do. You know, someone updating the chart every day, or every month, or whatever it might be. Yeah. Very.
If you're coming down from tops, and you've got your several angles, 1 by 1, 2 by 1, 1 by 3, whatever, do you find there's a consistency about which one it hits?
The big ones are the big hits are the 1 by 1s or the 1 by 2s.
1 by 1, 2
Yeah.
by 2.
On a monthly chart, most definitely. Yeah. Same sort of deal. I think I had some text here that's somehow not stuck behind that. I'm not going to fix it. Don't think I can. Even got an 8-year-old here. Oh, look, I can't find it. Oh, I know why I did that. I'm just going to stick with that, I think. This is a weekly chart. It hasn't built the way I thought it was going to build. Same deal as the monthly. 10 points per week is kind of like pretty useless. 100 points is somewhat better. Take out your weekly charts. You've got a weekly chart here of Bitcoin. I'm running out of time here. We may not be able to do all these angles. This chart is scaled at 500 points per square. 500 cents, if you like, per week. 500 points per week. Our 1 by 1 angle is going to be 1,000 points per bar. To me, it's a logical extension of 1, 10, 100, 1,000. I mean, you can go, if you want to start with a market that's not mathematically as good as this one, you can draw a dynamic angle and calculate that and then see if it will work. Find what works. That's at the end of the day the key to this. We're going to draw a few angles, not all the angles. So the first thing I want you to do is draw a solid angle at 0. The 0 by 1 angle, GAN 0 angle across the bottom of the weekly chart. It'll look like that. Remember, you'll get this stuff. You can do these exercises again if you want to in your own time. I'm really sorry. I mean, I just can't fit enough information into the 2-day thing. It's annoying. Please find the week marked the 10th of February 2020. And I'd like you to draw a 1 by 1 up from 0. There's 2 boxes up and 1 box sideways.
You've already done it.
Have I already done it for you? God, I'm generous, aren't I?
Yep.
Okay, so you've got a benchmark. Notice the resistance. I want you to notice the resistance up here on the right hand side of the chart. See how the market came up to this one by one and just kept beating its head on it? Resistance. Notice how the bars got smaller? It's struggling to climb above it on the weekly chart, and it's approaching resistance on a monthly chart. That's telling you something. It's telling you this thing's run out of steam, and it's coming into major resistance on a monthly chart. Okay, ranges are contracting. We talked about contracting ranges earlier.
On the swings or on the bars?
Swing ranges are contracting, yep. 28,900 roughly, 16,500, 15,000 as we move into that period of the market. So I'm watching contracting ranges, finding resistance on a weekly one by one, approaching a monthly one by one. That to me is pay attention time. If I've got a poultice load of Bitcoins sitting in my bottom drawer, I may want to convert a few of them to Aussie pesos. Or not.
That's the case, man.
Reason being, the downside of this sort of move is likely to be 50%, 60,000 down to 30,000. To me, that's just leaving profit on the table. And this thing's not paying you a dividend every month. It's one thing if you own BHP and you bought it at 20 and it's trading at 50 and it's paying you a dividend every quarter. That's different. And it comes back to 25 and it still pays you the dividend. That's a long-term investment for dividend. Bitcoin's paying you nothing to hang on to. Again, I'm not trying to tell you what to do. I'm just kind of telling you how I see it and trying to give you some ideas. To me, I'd be gutted if I bought this thing at 25 or 30,000, it traded at 60 and then it's trading back at 30. I'd be just going, what the hell am I doing? I got all this capital tied up in something that I made no money out of in 2 years, 3 years.
Are these the trades you don't tell your wife about?
Yeah.
She knows, she checks.
She checks, yeah, exactly. Exactly. She watches the incoming booze.
Is he having chicken or potato?
Yeah, that's right. Why we got chicken again tonight, love? Yeah. It's crazy. So it's contracting, it's struggling to go higher, it's against a one by one angle. It had resistance around 65,000 in May on the monthly chart. Remember the monthly chart? This is where we're trading in here on the weekly. We're not quite there, we're here. I think I put both angles on the chart here for you. We knew this since 2019. We knew to watch this point in time and price. 2 years before. It's struggling to trade through the one by one angle. Let's keep going. So find the week mark the 27th of March and draw a one by one up from 0. And then I will just flick through them so that we can get it done because it's almost lunchtime. That's how it looks. Remember I said you get a couple of these angles close together and the market starts to struggle. It finds resistance. And as the angles become further away, the market will move more freely either up or down. From a weekly perspective, you'll notice that this thing nailed the top here in, I think it was January or February 2021, sold off for 2 or 3 weeks, then it gained traction again to the upside.
John, what, if you don't mind me asking, why did you pick the 27th of March when the low seems to be in the week of the 13th of March?
Oh, maybe it's a typo. It's underneath the low. Or it could be the timing on the charts, because I think I made these charts on, these charts were made on Optima, and I think they talk about the week at the end of the week, and my CQG, where my brain works, is talk about the week starting. So there's probably, there could be a 5 or 7 day difference.
Yeah, you got-
But whack it underneath the low, the swing high and the swing low. We're doing the same thing, swing highs and swing lows.
that's good.
Yeah.
So two.
It is very hard. Well, that's the one he's
So where this market came up against the 1 by 1 here, this wasn't a 1 by 1 angle on the monthly. So I would be expecting maybe a pullback for a week or two, which is what we got, and then a continuation. I expect the major turning points to appear clearly on a monthly chart. So drawing the angles, I've said here it's a hindsight process, and I mean that in that you can't draw the angle until the swing is confirmed. So it could be 1 week later or 2 weeks later or 3 weeks later before the swing gets confirmed. At that point you can draw the angle. The same with the monthly chart. You can't draw the angle until the swing is confirmed. Then you can draw the angle. So it's a hindsight process to draw them to create something you can see in the future. Okay. Confirm the swing, yep. So I said find the week mark 8 January. I'm just going to keep flicking through here because we're at lunchtime almost. You could draw an angle down from the January top, dissecting 0 in November. We're trading above the 1 by 1s here, but on contracting ranges. Weekly close, that's an indicator of nastiness. 29th of May swing. From the top, I think it was, in here. Basically found support through here. Breaking this weekly swing, that was where the market was dead. That gave it away. If you were still holding there, you had one last chance to get out. We're already short. The fact that this thing gapped down beneath the 1 by 1 angle, then retested it and couldn't hold it, that was a giveaway. Just a giveaway. It had had its time. Okay, we'll just keep bulbing on here because we're going to run out of time. Let's get through a couple of these. So you can see I'm drawing these angles in consistently. I've got the high end now. The lows here, I can start drawing 1 by 1s up from here, 1 by 2s up from here if I want to. You'll find that if you go and have a look at the software, you draw them at home, you'll find that the 1 by 2s and 1 by 4s will actually pick off these tops and bottoms as well. But I only wanted to show you the big angles because I think you've got to start somewhere. And I think that you need to come to grips with what's happening with these guys before you end up with something that looks like a train station. We've got a chart there, we are. What happened in here? Think about what we talked about at the beginning of the session. Contracting ranges into a 1 by 1 0 angle, market reversed. Bottom on a 1 by 1 and an intersection of 2 1 by 1s no less. That's pretty powerful. Now this is not stuff you might want to use, but this is what Gann was doing. But I certainly think that if I was a physical trader, trading physical equities or physical Bitcoin or whatever as a buy and hold thing, unless I was really prepared to sit around looking for a 20-year cycle, I'd be quite happy to take some money off at these points and put some money back on. Take some money off and put some money back on. You know, you're not a trader. You're not in the trade for 7 to 10 days. You're an investor. You're in the thing for 7 to 10 months or more. That's an investment. But you know, you try and sell your house at the top of the market or your investment property at the top of the market. You don't wait to sell it down here somewhere. It's the same thing. It's funny how we think about different investments in a different way. Again, can you see that where the distance between these angles is quite large, the market tends to go into free fall or climb quite aggressively. When the angles come together, the market tends to struggle to go anywhere. So if you're trading into a period where you've got multiple 1x1s pretty close together, you can pretty well bet your hiney that things are going to start to slow down and get a little less interesting. Doesn't mean our day-to-day trading system's going to be any different. It just means this thing's going to find reasonable resistance there. Now, I'm just going to keep going. We can talk through hundreds of these things. Oh, here's one. Where the angle hits 0, pretty well calls the top. Same thing again. You'll get all of these guys. 1x1 down, resistance here. You know, this thing starts, and this is where we are now. I think I did this chart a few days ago. I try to keep it as consistent as I can, as close to the event as I can. You know, we start breaking above these things. We get a couple more angles in here, like all these angles can go in, and all of a sudden we start to see some support. Let's go through here. So this is a chart that I'm trading from, a weekly chart I'm trading from. Notice these major lows that I've got kind of flagged here. I put some of these in the newsletter from time to time. Share the joy. I'm watching this gap here. I expect this gap to fill and the market to retrace a little before it goes on. These dotted lines are 1x1s. I've got them all marked on here. I'm kind of just looking for them to confirm or be useful before I ink them in. And I do that because otherwise I end up with too many lines and I can't see what I'm doing. I lose focus. But you can see here some of the harmony of the ranges, just talking a little bit about those. The all-time high, range resistance card, you know, these levels here, I think that's an 87% retracement, which is, you know, this low here. It's around 4,000. That's why I thought this market could go back to 4,000 before it took off. Gann always said, watch the 7/8 retracement. If I just put that chart in front of someone, I'll just go, like, doesn't mean anything. But I work with that thing every week, so I know it intimately. And I know what I'm looking for in it. So I've already got angles off into the future here, along with my monthly angles. And I have positions, points in time that I'd like to watch. It will not impact the way I trade this on a day-to-day basis. But it might be useful if you're an investor. Or maybe after May next year, you'll be able to use some options around these tops or bottoms.
Is there any useful information you can gain by running the angles off the bottoms of your swings?
Sure, it's just more angles. Yeah. But I mean, you'll find
the
that
zeros are really helpful.
You'll find that the harmony, I mean, have a look at this one here. The 0 angle calls the low, calls the higher bottom, basically gaps through here at 50% of that range. That one should be in thick ink. It's a really good angle.
Yeah.
And you don't want to forget that when the market's trading up here at 100,000 in 3 or 4 years' time. But yes, you can run these angles off the lows for sure, off the highs, and off 0.
Or do you just confuse yourself?
I think you just confuse yourself. So I stick with the pretty basic garden variety stuff, because again, I'm not the sharpest tool in the shed.
But the more time it touches an angle, the stronger the angle is.
Correct. Yep. So I mean, you know, this probably only works on Bitcoin, as Jeff said. You know, I spent a few hours cherry picking this. This is the Bean Master chart. Now I've simplified it a bit. You guys, the beanies have got it. I don't know, these angles that were drawn way back here in 97, any good in 2000 or 2004 or 2008? You know? This one that we drew back here sometime, you know, the May 2000 top, December 2000 top or bottom, whatever it was. Those angles were drawn in 2000 or 2001. Sorry, that should be 19. I've got an error there. No, it's 2000. So, you know, are they any good 12 years later? I didn't draw this in 2012, I drew it way back here in like, I got the paper charts at home, you can come and have a look at them.
The line might have faded, John.
Sorry?
Your line might have faded.
Yeah, I put black curtains up, keep the sun out. Yeah. I'd be buggered if I was in Queensland, daylight saving. Well, this one here, again, I haven't got hundreds of them on here. I wanted you to see these things clearly working, one by one. Called the, you know, found resistance here, ground sideways. The master cycle had us sideways through here, the 30-year and the 60-year cycle. Okay, so it traded through here and then regained it. Once it regained the one by one angle, that was a signal that this market was going to be off to the races again. And it tied in with the cycle. 2012 top, 2 by 1, called the low to the penny in 2019. From the low here, you can draw angles from the lows, as I said. The 2 by 1 called the top in May 2021 to the penny. If you're trying to trade options or you're trying to be a position trader, these things are pretty useful, in my view. You can add as many as you like, you can make it as complicated as you like, but the reality is the more complex you make it, the more decisions you've got to make, the less trades you'll take, and the more you'll confuse yourself. That is my opinion. That is how it was for me. So I just stick with the main ones. You will find an angle that will pick off every one of these lows and highs. Spend an hour on the chart, you'll find them. They're everywhere. Just set the tool up and drag them across the highs and lows and the zeros, you'll find them. They're all there. With something like beans, you overlay weather, seasonality and weather patterns, and all of a sudden, that with the biggest cycles, you're off to the races. For me, less is more. The low before the low is another soybean example. The low before the low or the high before the high will often work. 2 by 1 picks this off. 1 by 1 became kind of, you know, semi-support here. The high got this, as I said before. The more angles here, the 3 by 1 clip this one. The more you want to put on, the more you'll see. But the question is, how useful is it? How are you going to use it? That's the trick. You got to have a plan. Oh yeah, I said. And when you've been working with a market for a while, you see patterns. This pattern here in between July 18 and April 2020 reminds me of 1940. How do I know it reminds me of 1940? Because I've drawn that chart so many times. There were 3 lows, 67 cents, 66 cents, and 67 and a bit cents. There was a big triple bottom that GAN traded back in the 1940s. This looks exactly like that. And then the market was off to the races, just exactly what we did here. Okay, squaring the low, I talked about this before. So where this big 1 by 1 squares out the low, comes in July 2024, the 8th of July 2024. I'd be pretty interested to watch what happens around that time. And we'll know what's going to happen. We'll see what the market's doing. It's going up, going down, or we can refer to our master charts and forecasts and have a pretty good idea what's going to happen. Where the angles cross zero, they square out. I've said that 4 or 5 times. Be very careful you don't miss that. If you're drawing angles, draw them back through zero and make a note in your diary. They're likely to be very important. But of course, it only works on, that was, yeah, right. July 1964 and July 1993 were major turns in the soybeans. 1964 to 1924 would be 60 years. Remember I said I'm coming, yes, lunch? Right. Remember I said everything's connected. When you look at a number, when I look at 1924, I automatically think of 64 because I'm working with 60-year cycles and 30-year cycles and 90-year cycles. So I just go 64. But they're the sort of things that as you work with these charts, more and more you will see. that those years and stuff will reflect. We'll get a turn in July 2024. I mean, I'll put $50 on it now. A moderate bottle of wine, nothing too special. Right, and of course it only works on beans and Bitcoin, but what about oil? This is an old chart you've probably seen before. Called the top. You know, these things, they don't work much. Call the top. What do we go through here? That one wasn't terribly useful, but it called the top here and it was right through this gap. When you start putting angles on charts, you need to kind of keep a bit of an open mind. Sometimes a 1 by 1 angle, if you've got a market that gaps around a lot, the 1 by 1 angle will run right through the middle of the gap. It just gaps straight over it, jumps it like a skipping rope. So the fact that it doesn't pick a top or a bottom, but it might pick a gap, that in itself is a signal. A market that jumps over a 1 by 1 is very weak to the downside. Strong, conversely, to the upside.
If you say, looking at October 1, 2018 there, and it came up and hit that angle there, if you were at that position there, why not say, oh, I drew another line down here, it's going to come up to the other line above it?
Sure.
So how do you, I mean, it looks all right when you look back on the day.
But when you watch what's happening on the day and you see a market hit the angle and reverse and close weak, that in itself is a sell
so
signal.
the short time is a good way to get your angles going on.
Yeah. So I'm really trying to show you angles that work on multiple markets. It's not just one, not just a one pony trick. They work on multiple markets. That's what I'm trying to demonstrate.
Okay.
But if you're banging away just trading, we're going to be just trading anyway. No, we don't need these angles at all. But if you're an investor, they're useful. If you're a position trader, they're useful. Or if you're maybe an option trader, they're useful. And if you've got a forecast, that calls for a top around October or September or October 2018, as we did, and you hit the 1 by 1 angle in reverse, you've already got a boatload of puts on anyway, so you're already short. You're probably short from back in here somewhere.
So, John, this is a current weekly chart.
No, this is an old chart. This one goes back to 2000. Oh, we go out. Oh, yeah, no, it might be, maybe it's got January, I think. Yeah.
Because the question I had was sort of, see how it's hitting the resistance of the July 2008 1-to-1 angle, I think, draw.
July 2008.
It's a move start.
Oh, here.
Yeah. So I'm saying so you would, looking at this chart now, where do you see this market go? Do you see the market? Would you read it as it's hitting resistance? It's probably going to come back
Yeah.
a little bit.
Yep, absolutely.
Yeah.
Yep. Yep.
And then if it broke through that.
If it broke through this 1 by 1, found support and came up against this 1 by 1, that's what Gann would call a cinch short. He would sell it. If it broke down here, broke the 1 by 1, and then came back up against it on a weak bar, he'd be all over that like a bad suit.
Probably in advance too.
Probably. Okay, back to Bitcoin. Hell's bells. If I don't know how much more of this I've got. If I was an investor and I'm not, I'd be looking for a long opportunity. If we start breaking the 1 by 1s to the upside on the weekly chart, support on a 1 by 1 from the all-time high would be a bullish signal, I think. If it had support on a 1 by 1 up, that would be more interesting. And additionally, we haven't discussed the good support levels, which I was talking about those range resistance cards. Even if you're trading your daily charts, it's useful. Well, it might give you some more confirmation if you're going to take a Rule 1 long, for example, that maybe the low's in and the Rule 1 long would be successful. Maybe. The monthly chart, I mean, they're large support and resistance angles. If you consider the market that gave you a lower swing top or a higher swing bottom against one, that might give you some more confidence that the trade's going to be successful. You might run a full risk trade on that sort of signal. It might be a place you try and hang in for a longer pull. You know, maybe you get short on a first lower top against a 1 by 1 angle, and you take most of your position off, but you leave something with a stop behind that swing. Let the market start to run away, expecting a bigger run. I'm only giving you some trade ideas here. I trade the way I showed you over the last yesterday and this morning, just on a daily chart. That's how I kind of do it. These are some of the next steps to building on the plan that we've got, the ATM, the mechanical plan, and they may be specific to a particular market. That depends on your plan. So the same angle on Bitcoin may not work on crude. You'll have to go and do some work. It might be a 15 point. Like 12.5 cents works on beans.
Geez, I would have loved to see wheat the last 2 years. Huh?
Wheat, the double top trade in wheat this year was sensational. Yeah, that was a really nice trade. No typo. These things take time to assimilate. You need to work with them. That's why I say keep it simple, work with them. You need to see them unfolding. You'll see it on there and go, oh wow, but you won't believe it until you actually have them on a chart you've drawn and you watch this thing trade up to them and stop and go the other way. It takes time to see this stuff work. That's how it was for me. Start simple, 1x1s, watch how the market reacts around them, and then add the 1x2s and the 2x1s. See what's happening. Keep it simple. And if they're not working, take them off. Just go back to using the big angles. There's no point having stuff on a chart that's not doing you any benefit. Feels good to have all these tools there, but if they're not useful, get rid of them. Feels too confusing, simplify it. Look at the smaller charts weekly, then down to the daily to trade from. That's how Gann did it. As an example, a lower top following a top against a solid 1x1 would be a comfortable trade for me. That's what I said just before. If you've got a solid hit on a monthly 1x1, market comes back on the daily chart, pops up again to give you a lower top trade, I'm going to take that as a full risk trade. If my max risk is 10%, I'm going to take every contract I can trade at that point. Whereas I might fluff around with, 5 or 6% or something. That to me is a full bottle trade. And I'll be trading it on here, but I'll be using that to make a decision about the position sizing. This is the Bitcoin. This is the Bitcoin chart. That's the monthly angle, and I've calculated the weekly angle so you could see it on the chart here. But this here, where we're entering, this is a lower top trade, or rule 1, I guess. Where are we? Bang, 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 bang. So rule 1 short here. To me, that's a great trade. The market, we're getting into the trade below the weekly 1x1 after hitting the monthly 1x1 and failing. That's a full risk trade. You get out your number 1 batting club and you hit it pretty hard.
End of October too.
Funny that. On a duck, on a full moon, and you know what? Nothing going for that trade at all. But technically this is pretty good. Failed the second time, found support, couldn't muster it, failed. Your short is beneath that weekly 1x1. That's just, as Gann would say, a cinch trade. It's all right for him, he took them all the time.
Call them a Gann slam.
Gann slam. And there it is, kind of bunched up so you can see what happened. Yeah, so, and then I think I've got that's a Pi's resistance card from whatever it was, 70,000. And you can see it ran straight down here to 50%. Lost motion, rallied, couldn't go up, and now we're finding some support in here.
I can see why you've narrowed your portfolio from 24 down to about 6, John.
Don't need any more. Yeah. So here we are, just the weekly. This is the 1x1 down, just so you can have a quick look. This is where we are now. Finding support on this angle would be a pretty good time to start going up. This actually looks to me a bit like it did back here in 2019 on the cash charts. We had a false break here, up against another angle, and the thing fails. Breaks the weekly angle. This is just where as an investor I can't even contemplate you'd still want to be in this thing. But that comes back to feed, greed and FOMO and other things. All right, We gapped over the weekly angle. That's just weak as hell to me. And then, you know, you got a lower, that's a weekly chart, so you got a lower top trade here on a weekly, and you would have a lower top trade on your daily. Again, full bottle, just full risk, nail the sucker. When these things set up like this, it's got feed me written all over it. These are the trades that make up for all the crap we deal with when we grind sideways. Could this be an opportunity here? I'm certainly fishing for one. But you know, I have these lower swings that I'm down here around 8,000 and 4,000 that I thought we might get to, but maybe we won't. You know, this could very well be the low here now. If the index lows hold, I'd say that's the low already in for Bitcoin. Watch the markets with the takeaway, watch the market with contracting or expanding ranges, watch for blow off tops, parabolic moves, healthy markets step up, watch for angular resistance if investing against the 1x1s on the big charts like a monthly. Maybe think about taking some skin out of the game and getting reset. And then drill down for a closer perspective. That's how Gann did it. Where angles intersect can be a change in trend. Where angles, where angels square out across zero can also be a change in trend. They can be angels telling you what to do. We can have these key times to watch, key times and prices to watch years in advance using monthly charts. This is the power of the monthly chart. Have a plan and to act if you're an investor. Don't let greed eat your profit would be my motto. But you know, again, we all look at this stuff slightly differently. Any questions? No.
I just want to say that was brilliant, John. Fantastic.
I wish I had I wish I had a full day to talk about this stuff and present it slightly differently. And maybe if we do another workshop and people like this sort of stuff, I'll work up an exercise that actually shows you the angles going on in advance and get you to paper trade into them so you can get a sense of it. But you know, we've gone 2 hours nearly, and I could talk for a full day on that stuff without even flinching. And then what you see in that stuff. So if you haven't seen it before, it's a bit of an introduction. Some of you, I know, have been with me before and we've talked about some of this stuff. You've probably seen more today than you would have seen previously. Same stuff, but you've been able to assimilate some of it. So guys, look, thank you very much for your attention. I know it's a lot to absorb. I hope it's been useful. I think Kirsten's got the barbecue going in the next room or something. She's got a 44-gallon drum. So if you'd like to go and grab some lunch,